Today's number is 2021. Why? Because that is the last time we've seen Cathie Wood's funds get so many record inflows. At the same time, the short sellers are back, this time in Palantir, and we've seen the top stocks breaking through records in the markets start to find some levels of weakness. So what gives and what is Wall Street up to? In today's video, we'll break down stocks, commodities, and cryptos, including the key levels, including 120,000 for Bitcoin, and what it means for all of us. Don't go anywhere, guys. A lot to talk about. Let's get into it right now. Well, welcome back, everybody, to The Daily Show. And in today's video, we'll cover the latest macro, the dark pool trades that matter to all of us, and of course, the key levels that you should be watching. We'll start off, though, by discussing these inflows, because Cathie Wood's fund is doing things that we haven't seen since 2021. And if you've traded markets, you would know that we had hype and euphoria at that period that was absolutely insane. Some stocks were being traded at 1,000 times earnings, and they didn't even really have any earnings. So, of course, they were absolutely ballistic. But at the same time, we have here record inflows. And it's not just the main fund, ARK-K. Also, ARK Next Generation Internet ETF saw a single day haul record at 349 million inflow funds. So this marks a massive change in markets. And while we've been discussing the idea that these stocks would be on the rally in the recent months, maybe that's starting to come to a head where everybody's going a little bit too crazy for the time being. The second largest dark pool trade came through, and you guys know that when this happens, it means one large trader has done a deal with another one, and sometimes it can mark temporary highs or lows. Notice the 13th and the 15th were near the lows. Then we saw a couple of people obviously trade near the highs here, and now we've got some more near that double top high. So what gives? Is this actually a sign that we might be in a bit of rotation in the markets? Well, one thing's for sure is it's all looking like 2021 again because the big short sellers are back. Yes, it looks like here, according to Citron Andrew Left, it looks like he believes that based on the OpenAI valuation, that PLTR should be only worth around $40. Now, at the time of this recording, it's like just under $180. So obviously, they are going short, it looks like, and they're basically saying, you know what, we believe these markets are overpriced. Now, of course, they've had mixed success in the past. They famously tried to have a go at GameStop, and that was pretty wild back in the day. But it does line up pretty well with some other large dark pool transactions. Again, we have a monster transaction happening right at the highs here for the 2 times levered ETF. And again, it's kind of all happening in sync with each other. And you guys know that we're all about on this channel finding a synchronization between these pairs, between, of course, the dark pools, and seeing whether they line up well together. Well, as this happens in hyper stocks, we're also seeing some volatility coming back into the cryptoverse. So I thought we'd kind of talk about Bitcoin here for a moment because Michael Saylor came out and made a tweet, and this is probably more coincidence than anything else, but he basically said, volatility is a gift to the faithful. Last time he said this, Michael Saylor ended up causing, well, of course he didn't do it, a 30% crash in Bitcoin. Now, he just did it here on the 14th of August again, and he said, volatility is a gift to the faithful. And since then, we've obviously moved a little bit lower on markets. Now, could it be that we're seeing basically this thing called the 6-month drop? Well, let's take a look at what crypto's done in the past. First up, Ethereum shorts. They are massive. Everybody's trying to short Ethereum. And we do know that a lot of people just got squeezed out of that position. So while we hit the all-time highs or got close to them, we also saw heaps of people lose their short position. And the latest data shows that there are even more shorts on this market, which means that, of course, people are starting to say, you know what, I'm doubling in or I'm going in again because I've lost, some money, and they're kind of maybe even revenge trading. So net shorts obviously on the rise against the crypto markets. But here's where things get interesting. You may have seen this chart before. If you haven't, make sure to subscribe to the channel. And this one here is from Brett F. and over on X. And obviously, it is based on the halving-based cycles. Now, you guys know I've followed this for years. So have you guys. And it does tend to work pretty well. In fact, we used it last year to realistically love Bitcoin at around the right time. And at the moment, it looks like we could be leading into, of course, the same thing. Now, if we follow the same thing, you may notice the last cycle, we got a sell-off followed by a rally, followed by a peak into the end of the year. Now, it's notorious that we often run into those December periods in the cryptoverse And it's also notorious to often get some volatility around this time of year. So as it turns out, there's a couple of posts out there, this one by Wrecked Fencer, and he's gone through and had a look at some of the periods. 2011, duration 9 months in terms of the bull run to the end cycle. That's the last run. Bear trap hit around 6 months. 2013, bear trap hit around 6 months. 2017, bear trap hit around 6 months. 2021, bear trap hit around 6 months. So will it happen again? Well, I had a look into this one, and obviously what I found was that it's not quite like that, but what we do see a lot of is volatility somewhere in that period. So of course, there's no exact science, but there is a classic case that usually before you see kind of the FOMO euphoria in the crypto market, there is a pretty brutal sell. And that sell does tend to be around 20 to 30%. Now, why does that happen? Well, of course, it wipes out longs, it gets people scared, and it's the classic thing that crypto does. If you've traded crypto ever since at least 2017, you've seen this happen many, many times. And it's an interesting one because is this the period of time that it should happen? Let us know in the comments down below if you think it is, but it does tend to make sense. So of course, happening at around this period, in a period of time when you usually see volatility spike back up in markets, would make sense. According to the latest Nautilus Investments research, obviously we find ourselves at exactly where you would expect to find yourself based on SPX seasonal composite of 4-year election cycles. And you guys know I love this type of chart, and I've been expecting it for a while. A potential pit here in the markets, which isn't something to be scared of, based on rotation. So that is that we go from the big top 10 stocks to possibly other sectors, things like healthcare, stuff like, other sectors in the markets that are potentially undervalued or seeing rotation. And then that, because the main ones are tech, tends to lead to a bit of a sell-off in the index, or at least a sideways action. It also comes in line with volatility spikes that tend to happen around this period of year. So does it make sense? Well, I guess it does. And we have seen some worrying signs come through from Bitcoin, mostly in that weekly shooting star. I think the closure of the weekly above 120 is going to be such a big deal for the bulls if it does occur. But at this stage, it looks like the bears are in control, at least of the smaller timeframes. So should we be worried about volatility? Well, according to the bonds market, the answer is absolutely not. The S&P 500 literally is just going crazy when you're looking at it as a percentage of high yield bonds. So look at the percentage of high yield bonds. No one cares. The bonds are loving life, and it looks like no one thinks there's risk out there. But in our next video, we'll be bringing up all of these massive delinquencies that we're starting to see. Numbers we haven't had since 14 years in the US markets. So that's kind of weird. But US earnings revisions, momentum, all of these things. Look at these revisions. The economists out there, they're going wild. They're like, yes, we upgrade everything. Everything came in pretty good as per earnings. And of course, it's difficult to see a market sell-off when that type of stuff happens. Now, as I mentioned, there are some problems. US office space vacancy rate is going ballistic, and it doesn't look like it's stopping. Like this thing post-pandemic, look at that thing. It's up there at 20% almost. And while these guys tend to be able to hold their positions, clearly there's some problems out there in the markets. Most interestingly, this actually happened the same way, if you notice, at around 2006. I think that's very telling, because if that's similar to the 90s narratives or the global financial crisis narratives, we're actually seeing office space get up to around those same points. So what about the breadth? Well, we've mentioned that we had 2 back-to-back pretty much 80% breadth days. We've also mentioned that we're losing a bit of momentum in some of the major markets. Now, this NYSI indicator obviously tells us that we're starting to see similar signs to what we saw in February, which of course led to a bit of a consolidation. We got Liberation Day and all those other things, but let's just say we knew there would be a consolidation around there because it was overdue. And generally speaking, this is, of course, those signs that you start to look for underneath the hood, and you say, well, let's pump the brakes a little bit and look for other opportunities. Maybe the big tech stocks shouldn't be where they are anymore, and maybe it's time to see some rotation. Now, why could that be? Well, have a look here at the latest Goldman Sachs report, 97% in terms of percentile versus history. So information tech certainly is up there. Meanwhile, real estate actually is cheap in terms of stocks. I don't like that sector, but hey, it's cheap. And healthcare is also quite cheap by these own metrics. So you can see here that clearly there is quite a lot of hype into the tech side. The other thing that's important to note, that is the big crash going to happen from here? Historically, no. August is very rare to actually be the topping of the market. So I think a lot of people are starting to feel this, but even if you got a 5% sell-off, you'd be seeing people freak out straight away on this type of thing. So it's very important to note that August historically is not the month that ends the market. So if you do see a sell, generally speaking, there are dip purchases there. But I think there are also some other important things. Now, people will say, oh, this doesn't work anymore, this isn't a thing. But if you actually take the overvaluation across the board, combining PE, forward PE, CAPE, all these different ratios, you'll find that we are in a very unique period of time. We're in the dot-com bubble, the stagflation bubble, and of course, the famous 1929. Also, 2021. So it looks like at the period we're in the markets that we are basically getting on to being the most overvalued ever recorded. And you might come as no surprise and say, oh, this time is different. But history would say probably not. The key is the timing to what's going on. So for now, of course, the general market, very bullish. I mean, you got to realize those bonds don't go up for no reason. They absolutely are not triggering sells, like when those bonds are loving life. But still, there's some problems here in terms of rotation. And I think that's where the opportunity comes in. We're still in earnings season, but the bulk majority of earnings has already taken place. And obviously, S&P 500 has already started to see, all-time highs, and it's still in an upward trend. Now, there were a couple of updates that I thought I'd bring you in terms of what's happening on the futures market. You guys can see here that we've tapped into that close to 6,500 a few times. And this is, of course, a major core wall. And at the same time, you can see that we've started to find a little bit of consolidation around this area. Now, I don't think there's enough to say short, or anything like that. There just is not. The market is still upward daily, upward weekly, upward monthly. And you've got to keep that in mind. But 6,200 will be the key level to watch in the future for dip buyers. And of course, if it breaks, we could be going just under 6,000. They would be the two levels we'd look at. Let's now have a look at whether the options agrees with that. We are in a tight consolidation. So 64, look how tight this is coming into Jackson Hole Symposium. Tons of puts, tons of calls, all very tightly struck within each other. That's why we've seen very low volatility in the markets, because both sides are actually seeing huge amounts of options activity both ends. And you can see here that calls are monstrous past 6,500. So if we keep going up, we're going to keep squeezing, and that would make sense. But there are some, again, signs of rotation underneath the hood, which we've covered for the last kind of like 4 or 5 days. Let's now move over to Tesla. It's the same thing. Tesla's still technically in a bullish kind of like options run at this stage. 350 is the main target, then 380. Mentioned that many, many times. And Nvidia is, of course, struggling around 185, which it has been for a little while. Has it sold off? No. Have we seen any signs of weakness in the best stock in the world? No. So they're not coming through yet. Let's now jump into the yields, because a lot of people look at yields and say, well, the yields are coming down. It's happy days. Not so fast. After the PPI result last week, which showed inflation could be coming back, guys, take a look at this. It's actually going back up. So again, some problems here. These yields haven't caused a sell-off yet, but they're certainly coming. And it begs the question is, are there other opportunities out there? Have a look here at KWeb versus the SPY. Now, you guys know that I've been a bit of a fan now of the Chinese markets for about a year, coming on a year now, and they've done very well, by the way. But at the same time, you see them on the charts. It's not really my opinion of I like any one of these stocks or anything, but you can see here, even KWeb is starting to pressure those previous peak highs. And this is really important because when you look at the Shanghai Composite, it just broke to a multi-year high as well. So that's a million zeros in one. And you can see here, you zoom it out, look at that, big breakout, a lot of liquidity coming in. So it does show you one thing, which is the abundance mindset. Lots of opportunities out there. Not saying this is the one that's right for anyone in particular, but it's just that thing that there's always something else. So remember that in markets. If you miss one, if you miss Palantir and you kick yourself over it, don't worry. There's always another big position. Now, speaking of Palantir, one of the things I noticed on Palantir is that it had one of those outlier weeks. So this is a huge 17.67, 18% kind of candle. That's a big one. And that often does bring it quite a lot of volatility. So it's always worth noting that when you get these huge amounts of vol, that you have to be then considering, okay, well, wait a second, should I be considering this as healthy or is this actually a bit sick? At the same time, you've now got the famous short sellers coming back in on it. So it's going to be a very big one to watch. Some other things to watch: semiconductors versus SPY, still showing an upward trend for the overall health of the market, and bond spreads coming back down after that spike. So again, a bit of a calm before any particular problems have come through. US dollar, no real changes here, looking still for a 98.90 kind of bull to get through. And remember, it's one of the most shorted pairs in the market, so it's going to stay in a range, you would think, for a while. Speaking of ranges, we still have the old gold range, 34.50-ish area, probably brings bulls, and maybe a break high of this level here could start to bring in a little bit more flows. But it is coiling like a very tight spring. Another one is silver, which has looked a little bit better in recent days. Silver stocks, that is actually the stocks, the companies, they seem to be running as well a little bit at the moment. So gold stocks and silver stocks doing a lot better than the actual raw metals at this stage. As we mentioned, Nvidia has done nothing since hitting the call wall, which makes sense. A lot of really tight range stuff. So when this happens, often when you do get a break, it's quite explosive. So I think that at some point soon, we'll be getting quite a lot of volatility on these pairs. And as we mentioned, Tesla, after its breakout here, has kind of come back down, but 350 and 380 on the option side at least are where Tesla kind of looks like it's going towards. And you might look at the macro and say, oh, it should be like $200 or something, but it's irrelevant with Tesla. It's just really about, does it see flows? Does it see options plays? So follow the flows. Don't follow your opinions too much. It's usually, or my opinion would probably be wrong on it as well. You know what I mean? So I always follow the flows on a stock like that. Chinese market did make a new high. Obviously, the daily 50 is something worth watching, which is the 50 moving average. And then, of course, we've got Russell versus SPY, the age-old question. Have we seen small caps make it through yet? The answer is quite simply no, not based on ratio performance. So we'll need a 0.36, probably 5, to really say that the Russell is looking better. And when you check out the Russell on the charts, it does currently look a little bit bullish, but at the same time, maybe it needs to get through 2320 and then go towards those all-time highs, 2440, etc. The Russell has been playing catch up for a while. Tech stocks did fall underneath the daily 20, which is something to note because, as you may notice here, they've been quite good. And then they made a lower high and then they sold underneath, which is telling us there's a little bit of weakness in the tech stocks. And that makes sense because we've seen things like healthcare do better. Check out our weekend video if you haven't seen that. And some of the other markets do a little bit better recently. Now over to crypto, what's going on there? Ethereum has been dropping. It's about to hit its first level of major support. I guess it kind of did here at 4,226. So this is a major level because it's not only the daily 20, but it's also the level of demand. So a bit of a sell-off, exactly what we would have expected from Ethereum, smashed into 46.47. That's a multi-year all-time high. And we then see a bit of a sell-off from that point. So that makes sense after that euphoria. I don't think it's over necessarily, but at the same time, it does kind of make sense to come back down. And that's where you get to Bitcoin. And the big question here is that weekly too shocking? 120K plus, that's a big deal for bulls. But for now, I've got two levels that I'm looking at in particular. And one of those is obviously this low, which is 100K. And the other one has to do with, of course, the volume profile. So if we have a look here and we look through the volume profile, you're going to see a lot at about 104 to 106. So if the markets do take a 112 low, then they're probably going down to here. And then I think we'll probably see some form of bull buying. And remember, if you take the percentage, that would give you about 16. If you took it down to the lows of about 100, that's going to give you the 20. And maybe if you get the sailor style, which is obviously the 30%, how low would that take us? Well, that's actually going to take us down into the 90s and stuff. So, you know, I don't know if we're going to get that much sell-off. I probably would prefer that doesn't happen. Some of you may want that. That'd be like an 86. So, of course, sailor tweeting is not enough on its own, but that is certainly a telling sign not to be able to get past 120K. What an important level that will be in the future for Bitcoin. It really should have been able to do that. Let's now move over to the news ahead. We've got a bit of news coming. If you have a look, you have, of course, some major meeting minutes kind of reports Wednesday for the Fed. And then you've got all of this stuff coming out for different markets, including the US with PMIs, etc. But the big one is going to be Jackson Hole, which starts on Thursday. Friday, we're going to see Fed Chair Powell speaking. And obviously, this can start to move markets around. So expect some volatility this week, guys. Make sure to subscribe to the channel if you enjoy the content. It's awesome to have you on board. And I hope you enjoyed what you saw today. So to summarize, I guess it is the markets are still bullish on indices. I think it does look like rotation has started to occur. We've mentioned that for a little while. And remember, there's always another opportunity out there. So if you missed one, there'll be another one. Do not worry about it. Bye for now. See you in the next video.